Welcome back. You're watching Buy Now, Sell Now. Now, we've got updates for you on the earnings front. Tata Steel, we told you at the start of the program, is buzzing in trade. It's the top gainer on the Nifty, and on the back of the earnings of its subsidiaries, that is Tata Steel Long Products as well as Tata Steel BSL. Mubina is here to tell you all about what the highlights were from those earnings.
Well, our earnings dhamaka for today is going to be Tata Steel Long Products. Just a reminder for our viewers that this is the company that was sort of rechristened or renamed after the Tata Group of companies acquired Usha Martin, which was an IBC case. Now, Tata Steel Long focuses on specialty steel, which obviously means that it does enjoy better realizations, better margins as well compared to its parent company, Tata Steel Limited. Revenues have come in at 1,547 crores, a bump up of 53% compared to the corresponding quarter. But margins really is where the star performance has come in, because the margins have more than doubled to 32% from just 13.5% in the corresponding quarter. EBITDA as well has tripled from 136 crores to close to 500 crores. And the profit after tax has come in at 43 crores after just about breaking even in the corresponding quarter. Now, this stellar performance, while we were expecting it to be great on a year-on-year basis, there has been a massive improvement on a sequential basis as well. So, where my margins were at 30% in the previous quarter, they have improved on that as well. So even on a QOQ basis, we are seeing improvement. In the previous quarter, for example, realizations had already seen a jump of almost 10,000 rupees per ton. And in this quarter, another 3,000 rupees per ton have been added. So there's continuous improvement in realizations. The blended EBITDA per ton as well has increased. But apart from the operational bit, even on the debt front, there's been a massive reduction. The finance cost has reduced. The net debt has more than halved in FY21, and hence this is our earnings dhamaka of today.
All right, and speaking of steel, there's a brokerage report that's come in from Morgan Stanley about steel stocks. It says that the third price hike in April and has taken place and more to come. Hikes of between 1,700 to 3,000 rupees per ton across steel products have been seen in India, and a gap with import parity prices will aid hikes. Tata Steel is likely to be the biggest beneficiary, and that is holding out in trade today. It is doing quite well for itself, and so is JSW Steel. Now, let's move on and talk about a grim situation that relates to the COVID-19 pandemic, and that has to do with the availability of oxygen. Now, the centre has increased the quota of oxygen supply to the worst hit states that have seen the recent spike in oxygen demand. It has increased supply to at least 19 states and union territories. Mubina Kapasi has this report about the latest updates on the oxygen shortage battle.
India grapples with a tsunami of COVID cases. The state of affairs at hospitals when it comes to the supply of a basic medical ingredient, oxygen, seems to be quite scary. So we take stock of what the demand is like, what supply is like, who are the key producers, which are the industries that require oxygen as well year to date. First up, prior to COVID, the liquid medical oxygen demand was roughly about 700 tons per day. In the first wave, that quadrupled to 2,800 tons per day. And in the second wave, it has increased even more to 5,000 tons per day. So is India's production infrastructure ready to handle this? Well, it looks like yes, because we produce 7,200 million tons per day of oxygen. In stock, in fact, are said to be 40,000 tons. Now, it looks like largely things seem to be okay, because out of the 7,200, while usually half used to go for medical purposes, now since the government as well has asked for it, almost the entire stock will go towards medical purposes. In fact, Inox Air, one of the key oxygen manufacturers as well, has said that it looks like things are largely okay if you look at it purely from the numbers perspective. However, if the number of cases in India continue to increase, then we're going to have a problem. pricing as well has surged quite significantly. Now, the reasons behind this, behind the surge in pricing, etc., is because firstly, the demand is from, the west and the north parts of India, but the supply is largely from the eastern parts of India. Secondly, obviously, because of this reason, transportation and storage of oxygen, which demands very extreme temperatures, is a problem. Thirdly, there is no price cap. So that's essentially causing prices to fluctuate a lot. Inox Air, Linde India, National Oxygen, Gagan Gas, Everest Kanto are some of the key makers of industrial gases and oxygen. And meanwhile, industries that could be impacted: metal fabrication, automotive components, ship breaking, paper, as well as engineering.
Now, speaking of oxygen, let's get in a view from CII President-designate TV Narendran on what the shortage situation is like and what the industry can do to change that.
What is important for medical purposes is liquid LMO, what they call it, liquid medical oxygen. A lot of the industrial oxygen is in a gaseous form, so it depends on how much of capacity that you have to convert it into liquid. And so first we must make sure that the capacity that is available for liquid oxygen is utilized. And today the bottleneck is not so much in the availability of the liquid oxygen, but getting it to the hospitals, because a lot of the steel plants, if you know, are in the eastern part of the country. A lot of the requirements are in the west or in the north. And if you have a shortage of cryogenic tankers, which are required to transport the oxygen, then it's more of a supply chain problem than a production problem. So I think that's what the government is trying to address, to have these special trains which can carry these tankers across the country and bring it back in a short period of time. So these are the initiatives being taken by the government, and I think the steel plants are on standby.
All right. Now, we asked you earlier today, in fact, I think last night we'd sent this out, which diagnostic firm clocked over 300 crore of EBITDA in the financial year ending March 2020. The options that we gave you were Metropolis Health, Dr. Lal Pathlabs, Thyrocare, or none of the above. The answer was Dr. Lal Pathlabs, which had an EBITDA of 343.6 crore in FY20. And three of you got it right. I'd like to congratulate the winners. Sanjay, as well as Raj Kishore and Rajiv Joshi, have won the prize in that you've been featured on ET Now. Congratulations to all of you, and thank you so much for participating. And on that note, I'd like to say thanks so much for tuning in. There's lots more coming up in just a short while, starting with markets at noon. This is ET Now.